Hey guys, today we're talking about footprint charts and how to use them. What is a footprint chart? It's basically a tool, not an indicator, more information, X-ray view into the market, and basically a sibling slash twin of the volume market profiles. Well, how does that work? Over here we see a footprint chart and over here we see a classical candlestick chart. So how do you read footprint charts? Well, on the right side you have market buys. Over here the blue, that is market buys into asks. Over here in the red you have market sells into bids. So yeah, or bids, demand, whatever you want to call it. This is basically a trade breakdown on how you would do it on basically a candlestick chart. You could see dojis over here, reversal dojis, right? There's so many ways, and one way, for example, is over here. By the way, we're gonna analyze this same chart later with a footprint chart and see what the differences can be. So over here you basically see a reversal doji, or we can assume that there is an active seller in the market, as there are large wicks to the upside and smaller to the downside. We get walked up by bids, so we have a passive buyer for sure, as seen by the pushing to drive higher. And over here we drive up. Ideally we want to see a large volume here and not a thin move up. But I mean, how do you guys know what a thin move up is without volume, right? So it's all assumptions we're making here. And thin moves, we're talking about volume here, are not sustainable. So you would want to see a lot of volume over here. And then over to part 3 over here, we're numbering all these boxes, so the top of the range shows a wick, assuming this is a high volume liquidity grab and rejection. It's clear that the market got what it wanted and immediately rejection to the downside without a second test. So yeah, that's that. And then over here, part 4, a drive down. Is it high volume? We don't know. Or simply a low volume drive down, filling in the gap from the drive up. Let's take a look on the footprint, and that's what we're gonna do over here. The consolidation. And by the way, we're just looking at the candlestick chart because we're assuming a lot of people are used to candlestick charts, and that's why we're basically making the comparison. So a footprint chart, how do you look at it? So over here, part 1, basically, consolidation brings a liquidity build and squeeze. First tested to the upside, no liquidity found, low volume over here, no market sells, no market buys really. Then to the downside, liquidity found immediately over here. And you can see a lack of wick to the downside as bids walk the price up to the high of the range. Expansion. Part 2. As bids walked us up into that illiquid zone from earlier, we enter the zone with no supply and we teleport higher until supply is found, at which we enter the next consolidation. Look here, somehow, like volume starts, stepping in, and liquidity is found. And over here, no volume at all. And then, second drive attempt / trap. The second drive up, we can see an attempt made to push out of range, but medium-low volume, what we have is a failure of passive demand and aggressive demand to push through supply. So we trap the buyers and revert back into the previous range. One more push up after with more failure, then into a long consolidation. And now we go to part 3, breakdown into previous value. So over here, the last move in here was the test too low, which of course we know there was no liquidity on the way up or a liquidity gap. So we teleport back down through it until previous range where we find demand. Over here we find demand. So old demand. At the low we see the old demand that walked us up before is still providing demand liquidity. Old liquidity always gives a bounce for new liquidity as a rule of thumb, but more videos on that later. Absorption play / trap. Here we see, a chart of the ES, by the way. Here's an example. First, there's a swing down from aggressive sellers, no bid. Buyers coming in at last day's low, which, by the way, you would always mark out on the chart. We go above it, then go back to retest the trapped sellers. More sellers absorbed as a big bid came in, then push higher until, these same sellers puke basically their shorts, returning and hitting all of the previous imbalances. And guys, next video we will dive into each different chart type, like deltas, imbalances, delta profiles and more. The basic rundown is that all that footprints are more information for the trader. No direct indicators, but a look into what's happening within each candle or rotation, giving some structure to the trades. Guys, make sure to subscribe, ask questions, so we know what kind of level we need to make these videos on. And subscribe and let us know in the comments. See you guys soon, and happy trading.